Hey guys, it's Russell McDonald. I am a mortgage broker here in the San Francisco Bay Area. My company name is Tradmore. It stands for Trusted Advisor Mortgages. That's because I tend to work with CPAs and financial planners and other trusted advisor financial pros, helping them provide mortgages to their clients. So, yesterday, mortgages and treasuries were very slightly better, but today they opened a little bit worse and just kind of trended that way all day. So, we've been effectively moving sideways. In the stock market, the Dow was falling for the third day in a row, and it's looking less likely that we're going to manage to resolve the China trade war before the end of the year. We had jobless claims come in today. They're barely above expectations. Existing home sales came in decent, up 1.9%, kind of what we thought. The National Association of Realtors still says supply is lower than what we need, and so that's pushing prices higher. Just simple supply and demand. You guys probably remember about a month ago, President Trump announced that they had a phase one deal in the China trade war. They'd come to an agreement. This pushed rates higher back then. Then back on October 30th, the Fed lowered its benchmark rates by 0.25%, which barely moved the needle on long-term treasuries and mortgage rates. Then on Halloween, we got an announcement about the trade deal and that it was in trouble, along with the Chicago PMI report, which came in surprisingly weak. It was awful. In hindsight, that appears to be something of an anomaly because later reports that are of a similar nature haven't been as negative. Some have even been positive. Also on that day, there was a lot of turmoil over the Brexit negotiations, and this all combined that day on Halloween to lower rates by about 1/8% in one day. That's a huge move in one day. However, since then, trade war negotiations keep giving us positive, then negative, then positive, then negative news, which is pushing rates up and down and up and down. If the deal doesn't happen, stocks should fall hard and rates will likely drop as well with them. Now, China's lead trade negotiator still says they are cautiously optimistic that we can pull a deal together. We've got one possible fly in the ointment, though. There is a possibility that President Trump will sign legislation backing the Hong Kong protesters. This would increase tensions between the United States and China and make a successful trade deal less likely. China has already openly threatened to retaliate if the bill is signed because it says that supporting the Hong Kong protesters would be a gross interference in Hong Kong affairs. So, nothing really exciting today. We're coming into a big holiday week next week. Rates just kind of take a vacation too sometimes. Nobody really wants to commit to being aggressive in the market when we're in this type of a situation. So enjoy yourselves. If you have any financing questions, reach out. Let me know what you think. My podcast is coming out next week. I've got the first few episodes recorded already. And it's going to be fantastic. We're going to have financial information, mortgage information, credit, social media. One of our first episodes is a big social media marketer in the accounting field, and I'm really excited to bring this to you. So anyway, have a great weekend. Enjoy your Thanksgiving week. I hope you get to spend some time with the people you love, and let me know if there's anything exciting going on. Anyone have any questions? Talk to you soon. Thanks.